So in this chapter we'll see a few other terms in forex. One is usance, which we discussed about briefly. It is the allowable period of time given by the customer. Okay, so between the date of bill and the payment. So usually in trade there will be credit period allowed. We don't insist on cash payment immediately, just for the competitive reasons. So the time period given by the seller to the buyer, okay, from the date of the bill to the date of payment, that period is known as usance period. It varies. It could be 15 days, 30 days, 60 days. It depends on the agreement between the buyer and the seller. Then there is a term called demurrage. Demurrage is the charge that will be levied when the customer holds equipment inside the port terminal for a longer period. So what happens is the ships will come to the port, unload the material. Okay, so port will be having some limited space. So if ships will be coming on an ongoing basis, and all the material, all the machinery, all the goods that are brought by them, if they're not cleared because of the limited space, fresh material cannot come. Okay, so what port will do is, if the customers are not taking delivery in time, it will impose a penalty known as demurrage. Okay, so beyond a particular period, there will be some free days, but beyond that, if they're holding it, then they will charge demurrage, and it will be a very high rate. Okay, then there is a term called Volkl Status. So all creditworthy exporters with good background, with good track record, will be eligible for issuance of this Volkl status. Okay, and they'll be having some benefits, because once they have this Volkl status, they'll be having some benefits. Then there are terms called suppliers credit and buyers credit. So suppliers credit is the credit extended by that overseas supplier to Indian importer for import of goods into India. So say for example, we as Indians are importing some goods from abroad. The credit period that the overseas supplier is giving to us will be suppliers credit. Buyers credit means loan for import into India arranged by the importer, okay, from a bank outside India. So goods are imported into India. So we will approach a banker outside India for a loan, for some credit facility, and that will be buyer's credit. Usually these are quite advanced terms. Buyer's credit is discussed in detail in a separate book, which we have balance sheet analysis, credit appraisal for bankers. If you are from MBA or finance background, commerce background, you can see that book. But for your general banking interviews, just the basic idea of suppliers credit and buyer's credit is sufficient. So in this chapter, just understand what is meant by usance, demurrage, what is suppliers credit, and what is buyer's credit.